Buckle up and get ready. It's time to join the crypto revolution. Last episode, we left off at the hardware wallet. So, what is a hardware wallet? A hardware wallet is a secure device that is used to store cryptocurrencies offline. The wallet also functions as a private key to validate transactions. The upside of a hardware wallet is that it's nearly unhackable because it's offline. You are also fully in control of your private keys. In case that you lose your device, you will have a backup seed, which is a string of words that you can use to regenerate your private keys. So, what is the downside? Imagine you're walking through the cold streets of London on a late Friday night. There's an alley that will cut off a block and save you some time. You know that you should stick to the big roads, but you want to get home quickly to watch the new Grey's Anatomy. So you decide to go through the alley anyway. Lo and behold, a scruffy looking hobo comes out behind the dumpster and threatens you with a knife. But instead of asking for your wallet, he says, "Give me your hardware wallet." See, this hobo went to MIT and knows all about your crypto holdings. In order to protect your life, you give him your hardware wallet with your life savings on them. The hobo walks away as you take his place behind the dumpster. It's cybercrime in the real world. Obviously, in real life, people will be more cautious and not walk around with their main hardware wallet in their pockets. But the fact remains that a hardware wallet can be compromised. You should be extremely careful with where you store the wallet and the backup seed. Generally considered, the best hardware wallets are those by Ledger, but there are also alternatives like Trezor and KeepKey. Lastly, we have the paper wallets, which are perfect for our grandparents and the tinfoil head zealots among us. Paper wallets are the most secure in that they've never touched the internet. The downside though is that they are easier to lose and not as strong as hardware wallets. But as long as you don't throw them into the fire or in a tub with water, they are a very safe way to store your coins for long periods of time. You can easily generate paper wallets online on websites like walletgenerator.net or bitcoinpaperwallet.com. You can download these websites from GitHub and run them offline for maximum security. Then you just have to print out your wallet and store it in a safe place. You can make a copy of your wallet to store it in multiple places. But remember that anyone who has access to any of these copies has access to all your funds. Now that we've covered the different types of wallets that are available, we'll have a more in-depth look at trading. Because let's face it, everyone wants to get in on the crypto gold rush, and in order to do so, you need to know how the market operates. I'm going to warn you one last time though. The crypto space is very volatile, and there is a lot of very smart people that will outplay you. Not to mention the purely malicious people that will go above and beyond to obtain your coins. Tread into this space with extreme caution. Up till now, we've mostly talked about Bitcoin. The truth is that Bitcoin is just one protocol running on one type of blockchain. There are many more protocols out there, with new ones being coded every day. And there are even multiple types of blockchains, all with different rules and governance. Each of these protocols have different tokens for different uses which hold different values. Let's pretend you just celebrated your goldfish's birthday and your grandma gave you €100 to buy a new bowl. Obviously you're a smart person, so you throw the goldfish in the toilet, flush it down, and tell your family how sad you are that Henry died after his second birthday. Now you've got €100 starting capital to invest with. The first thing you do is check up on what's available on the market and at what price. A great tool for this is the website coinmarketcap.com, which ranks over 1,600 different cryptocurrencies as of May 2018. Being a human and all, your first instinct is probably to click one of the graphs with the pretty green numbers, the little line going up, and a high positive percentage. Be careful though and have a look at the chart's history. Look back all the way to when the coin was created and judge for yourself if this upwards trend is an abnormal spike or a steady rise. However, this video series is not a guide to investing, and learning something that difficult isn't done in a couple of minutes. We're just scratching the surface here. Another interesting thing you might notice is that when all the letters on the page are red, which means that all the coins are decreasing in value. This happens because all the coins have a value relation to each other, but also a value relation to the real world market. For example, if you put Bob and Sarah next to each other, it's clear that Sarah is twice as big as Bob. Should have eaten your veggies, Bobo. Currently, Bob and Sarah are living in a regular-sized world, but what if the world around them grows? Relatively speaking, they would become smaller and smaller. If they were put in a world of giants, they would appear as ants. On the flip side, if the world would shrink, they would appear bigger in size. But regardless of the world around them, Sarah would always be twice as big as Bob. This is what happens in the crypto space as well. When the whole crypto space gets more traction and attention, the entire space becomes more valuable. The world is growing. But when there is bad news and the blockchain's reputation takes a hit, all the coins decrease in value. The world shrinks. So keep an eye out for the relation between coins rather than the hard numbers. If you found a coin that seems to be doing well in relationship to the rest of the sphere, you should look up the project and start reading into it. Figure out whom the team of people behind the project consists of, what their vision is, their goals, their plan, and what others think of them. The more you know, the better your judgment will be. Another way to find interesting projects is to browse your forums and blogs, watch videos, or talk to people. Be aware that people who will tell you about a project will be biased, which can influence the description of the project for better or worse. Now that you've chosen a project you're interested in, you can start investing. The first thing you need to do is figure out on which exchanges the coin that you want to buy is traded. For example, Kraken is a fine marketplace to trade Ether, but it doesn't facilitate VeChain. For that, you might have to move to a marketplace like Binance. Once you've selected a secure exchange that facilitates your coin, you have to sign up. Usually this process will take a while, as exchanges will verify your identity and bank account. If exchanges don't provide thorough identity checks, I would be very cautious to use them. After you're signed up to the exchange, you can deposit money or cryptocurrencies. Then, on the exchange itself, you can start trading coins. You simply put in what coin you want to trade for what other coin, you add the price that you are willing to pay, and you wait for someone else that is willing to accept your offer. Once the offer is accepted, the deal is done, and you now possess the coin that you want. If you are planning to hold your coins for a long time, you can withdraw them from the exchange onto your hardware or software wallet. And voila! You just did your first crypto trade and have officially become part of the blockchain revolution. In the next and last episode, we will have a look at the future of blockchain and the amazing possibilities it has. For now though, the ball is in your court. Grab your pickaxe and polish your boots. It's time to get to work. Thank you so much for watching this video. If you enjoyed this content, don't forget to join the pack by subscribing down below. Crypto millionaires incoming!